Hello traders, I'm Juan Maldonado from the ElliottWaveStreet.com. Don't forget to read our disclaimer. Thank you very much for watching this video. We are going to share with you some of our trade plans from the Elliott wave counts for this week. Let's start with the euro dollar that has been choppy and has been sideways in general terms. However, once we have the end of this corrective wave 4 or the wave 2, I'm going to explain that in a second. The target is going to be the previous high, the 120. So we are going to plan a buy trade this week. Now let's talk about scenarios. The first scenario is the price doing this corrective wave as an irregular, flat and expanded here for wave 2, but once it ends, we're going long and we're going to target the previous high. So that's very subjective because once it ends, that means where? Here, lower, where? Well, to have an ideal trading plan here, we should have sideways price action to see the price gaining value, then going lower, and that's where we can start trying to jump into the buy trade. That's one scenario. The other scenario is the price just going lower and taking out this low. That would be my ideal. That's the one I really want to see. The price coming down here below this low, because it will reactivate wave 4, and this area, it's a gift from the market buying area. Oh, that will be so great to see the price of this area, and from there we can just wait for the price to slow down and reverse, and that's where we go long. Of course, without a signal, we are not going long. Not because the price is in an area means that it's going to reverse, right? That's just common sense. But once you reverse, for example, if we look to the left, look at this bullish engulfing candle. That's a reversal signal. Or here is another one. Here is a morning star. Let me highlight this one better for you. This three candle system right here. It's a morning star at support, right? So that's the thing we are going to look for at this area in order to validate the reversal, and the target will be the previous high. Of course, if eventually a red candle like this one starts going down, that is not a reversal candle, right? Just common sense. But if we have a reversal candle on our reversal area, that's where the magic is going to happen. Now, let's have a look at the S&P. The S&P is making a lower low, and here we go. Oh, I'm so excited about this trade. Look, this is the weekly chart. On the weekly chart, last week, we have an indecision candle. This one right here. The body was more to the downside, and this week, the market opened a little bit lower than those 2 weeks lows. So this is what I call a good deal, you know. This is a discount, and I'm going to explain you why in a second, but the target on the weekly chart, the previous high. That's the target. Now let's talk about how, when, and where the trade is going to happen. For that, I'm going back to the lower time frames. Let's go to the 4-hour chart, and the S&P sometimes moves to the downside and then bounces like in a V-type reversal. Most of the times, that is how the S&P gives the corrective waves. But this time, the market has something special to give us, and is the 3-wave sequence. Look at this beauty. Oh yeah, we have a 3-wave sequence. I see the S&P coming up here to the 3600 and less and higher. Now, look the support. The price accelerates, creates some value at this area. Big guys, institutions taking their profits, maybe start to accumulate. We know that they need to accumulate slowly. They can't place a big trade, because we will find that what they are doing. So they start accumulating, and they don't care if the S&P moves a little bit lower. So this is my plan. This creates a point of control. This creates an equilibrium, and a balance there. And once the price moves outside that balance, it's the opportunity. Now, let me tell you my magic level. On the index, 3 to 40. On the ES, the E-mini, 3 to 30. Because the index and the E-mini right now are 10 points apart. So that's my magic number for finding the end of wave 5. So here is my plan. Let's say that the price comes down here and it starts reversing, like moving back to the wave 3 or creating some sort of double bottom or inverted head and shoulders or a bullish engulfing candle or anything at this area. I'm going long with a small stop loss. First target, the old support, 3300. If it breaks out successfully, we go to this area, 3425, 3430, and if it breaks out successfully, we go to the 3600. So there are two ways to trade this thing. One is taking the full position out and re-entering on the retrace, or two, taking partial profits during the road, or three, trying to capture the whole move. That one is the most complex because if anything fails, you're going to lose a lot. So there are different techniques of managing the trade, but let's see what is going to happen here. And if the price, another thing that could happen, let's say that we have here a big red candle going down, breaking the 3200, well, we are not going to buy it yet because it's going to be deeper and we will need to do the same thing but lower to find the bottom. But that's what I'm going to do this week. I don't want to sell the S&P. I want to buy it, but I'm not going to buy it because without any reason. No, I want to buy it once I see the reversal, once I see that the price is slowing down the drop, and then there is an opportunity to get into the trend. Of course, I don't want just to go long because the wave count is stalling. Not, of course not. I need the reversal. And let's have a look at the dollar. Oh, look at this beautiful dollar. Now, ideally, the dollar should go a little bit higher. I would like to see some consolidation and the price on the dollar coming up higher. And if I see the price divergent, you don't need to see an oscillator to see a divergence on momentum. Just watch the price. Price action is key. Price going sideways, going up with less speed or acceleration or momentum than the previous leg, and that's where the trades are going to happen. That's going to validate the euro. That's going to validate other trades that we have in mind for this week, dollar CAD, dollar Swiss. So finding the end of this thing. In terms of fundamentals, we have plenty of dollars in the market, so why so expensive? A big surprise is coming. A big surprise is coming. All right, traders, so please have a fantastic trading week, and don't forget to visit our website, ElliottWaveStreet.com. You can take our trial to receive our daily analysis with charts, with videos, with trading ideas. So visit ElliottWaveStreet.com, hit the membership tab. Here, pick your plan. If you want the $19 Forex or the stocks or the full access, try it out for 1 month. If you like it, then it's $75 per month, and you will get all our fantastic content every day. Please have a great trading session, a trading week, and I'll see you in the next video. I'll see you inside the membership. Take care. Bye-bye.